Hey guys, welcome to Blockchain Banter, Trading Crypto. I'm Jen, and I'm here with Keith Allen, TA and algo trader, order book analyst, and co-founder of Material Indicators, along with Dr. Mark Richardson, project lead at Bancor and Carbon DeFi. Welcome back. Happy Tuesday. Yesterday, you guys was not looking very pretty, right? I don't know if it was that kind of Monday morning bloodshed that we'll see from time to time.
It looked good. It looked pretty if you were a bear.
Right? You were looking for good opportunities, or at least another opportunity before we, potentially took back off. But we did. The market turned around a little bit, and I don't watch it super closely. You might see some sort of catalyst, but we talk about different catalysts. We talk about different things that are happening. Economically, like just globally, just different factors that might come into play. Did you guys happen to see anything or hear anything that might have led to this, what I thought was kind of a sudden downturn, right? Like I'm thinking, okay, where are we placing our bids? And then all of a sudden we were, back up. And I think we're at like 96 something again now.
Right.
I think there's a.
Go ahead, Mark.
Right.
No, you.
I was just going to say, thank you. I think that there's a couple of things that isn't necessarily new news, things that we've spoken about before, that you might have heard me speak about before. Things like the yield curve inversion is now like completed, and this usually is a strong indicator. I think it has a near 100% success rate. So this is basically I think it's the three-year versus 10-year bond yields or something. I actually can't remember exactly how this index is worked out. But it whenever it flips from negative to positive, it generally signals that there's a recession just around the corner. And for like the last 15 instances or something of this occurring, it has usually resulted in a recession. So I think together with the general sort of overheated feel that people have in the markets, not just in Bitcoin, but also in stocks, precious metals, everything, has made a lot of people nervous. And so you're seeing sort of a little bit of that reservation sort of creep back. But I'm not convinced that this is like it. I don't think that, I don't think the top is in necessarily on anything. But I do get that feel from the way that people are speaking about things, the way that influencers are discussing stuff, some of the analysis that's coming out. There is a little bit more caution and fear in the market than there was a few weeks ago, but it's not new information. I think it's just the old information being dusted off and represented, and people are reacting to it as if they've seen it for the first time.
And Mark, did you see anything specifically yesterday on the yield curve that pointed to that?
There was an interesting weird amount of like stuff on Twitter about the yield curve. Like the yield curve has always come up like for the last couple of years, but I did notice like an unusual concentration of accounts that I wouldn't usually see speaking about the yield curve. Like people like Ben Cohen always speak about it or have spoken about it many times. And there was a Twitter account called Game of Trades. I think it's called something else now. Bravos Research that speak about it relatively frequently. But really, those were like the only two main accounts that would really bring attention to it. And then all of a sudden, there were like dozens that were talking about it.
Right.
So yeah, it's just indicative of like when that kind of bespoke information starts to become mainstream, especially if it's like bearish in nature. Just gives me the feeling that people are starting to like the stuff that's tracking is the stuff that's feeding into people's fears more than their optimism.
Right. Well, there's so much speculation that it's difficult. I find it difficult to trade successfully, consistently on speculation, which is why I like my heat maps and why I like technical analysis. And those remain my, I would say my guiding forces. As I try to tune out some of the noise, like today, yesterday we saw this dip. Today we saw, last Friday, I think it was, we had a good news jobs report, which turned into initially a price dump and then a rally. And then, we've seen price go up and down, and I'm seeing lots of I don't like to use the term manipulation. but I use the term liquidity herding, where we see liquidity moving or being placed to push price in one direction. And we've seen a lot of that both from the top side of Priceline and from the bottom side of Priceline over the past couple of weeks. So it gets challenging to like think that, okay, this is the move and it's going to we're up only from here or we're down only from here, whatever it is. So I continue to play and trade the technicals. I'll scalp on that liquidity movement because the outcomes are predictable, unless of course you're late. But if you catch them early, it's the outcomes tend to be predictable. But if you recall, last Friday we had spoken about the 21-day moving average.
Mm-hmm.
Not last Friday, last Tuesday, because
last Tuesday.
Talk on Tuesdays. Bear with me, folks. So Tuesday we talked about the 21-day moving average, and I at that time I said if price broke below the 21, we would likely see another retest of support at that 91.5 range, and if that doesn't hold, maybe the 86 range. And well, we saw a little bit of all of that, but not quite. Yesterday didn't go quite as deep as I expected it to. In fact, it landed in kind of a strange place, in my opinion. So I'm not convinced that we're done with like Mark said, I don't think the top is in, but I don't think the local bottom is necessarily in either.
That's interesting.
So which just means more volatility, right? And this month, I think, is safe to say has already been more volatile than we've seen in a while. And it's understandable, right? We have a lot of transition happening with the U.S. government. Obviously, Trump had his votes certified on January 6th. Inauguration Day is January 20th, which is now less than a week away. And so it's mostly speculation. The volatility that we're seeing at this stage is based on speculation because there's been no action from that administration yet because it's not in office yet, right? So the market is reacting to what they think might happen. And again, I find it difficult to trade on that speculation, which is why I use these lines on charts to help me make those decisions. If I may, I'd like to start just on the candle chart and about what we're seeing in the technicals, and that when the call was Tuesday on the 7th, right? There was the pump off of the vote certification was on the 6th. That was a 4% candle. Locally toppy at that wasn't an arbitrary number, by the way. That was a on the fib chart. There's a fib extension up there that we topped out at, right? The 1.618. But things broke down from there. On Tuesday, after we spoke, we were wrestling with that 21-day moving average, and on Wednesday, price broke through it. This, of course, is coming after a death cross that happened just a day or so before.
And you guys had mentioned that death cross too on last week's call,
right? And this could be this could end up being a short-term nothing, or it could develop into more. And right now, as you look at the 21-day moving average trying to smooth out, and if it can regain the 50-day, then maybe this doesn't amount to much, and things climb back out. We've got some history where that has happened, certainly. But there's also a lot of history where this develops into something more. And, you look at the trajectory between the 100-day, that's the blue line down here, and these moving averages up here. Obviously, it would take time for that to develop. But what we'd like to see more of is what we see here on the higher time frame chart, which is all of the moving averages getting drawn up higher and unwound. Green is 21, red is 50. Blue is 100, purple is 200. And so, today the market reacted to a lower than expected inflation report. This spike right here, basically is because eggs are cheaper. It's like it's as simple as that.
Yeah.
Eggs are cheaper, but that points to maybe the inflation situation not being as bad as people were expecting. And, it's still not pointing to a rate cut happening anytime soon. And like I said earlier, speculation on what might happen with tariffs. So I think that we're going to, maybe hold in this range. We've got another round of economic data. CPI data comes out tomorrow. And again, I think we could see some knee-jerk reactions to that news. I think that the real move develops after the new administration takes office and we see what's actually happening, right? So let's say things dump down here, and I would have been much happier if this went down all the way down to this 86 level. Say we have confluence between the 100-day moving average and this 86.5 level. That to me would have been picture perfect. Maybe a little too obvious for this market, right?
Right.
What's more likely to happen is a flush, a wick below it to shake out the algos and weak hands, and then pop back up. Like I had some bids on some alts yesterday, or the day before.
Go ahead.
That got filled. I had tight stops on them, and they got wicked out. Fortunately, my Bitcoin held. I have more confidence in Bitcoin, so I'm willing to ride a deeper drawdown on that. But I think it was. I think I had a little bit of Litecoin and a little Solana, and opened and closed and done. Okay, it happens. You don't win them all. I do think that we could potentially pump up here. Maybe even, maybe we do get to 100K. Maybe there's a, depending on tomorrow's news, maybe we have another Trump pump into Inauguration Day on Monday. And then what are those 100 what's involved in those 100 executive orders that he has for day one? How much of that is going to affect the market? Is there an executive order to not sell any more of the seized Bitcoin? Well, that the market would like. Is there an executive order to start tariffs? Market's not going to like that. So depends on what unfolds here. Regardless of what we can speculate on, the moving averages, the technicals don't lie. So this is why I rely on this more than I listen to the noise. Now,
and as much as we look at the order book, it was like you were saying, there was some inorganic, maybe movements for the liquidity, right?
Yes.
Placement. So it's the technicals is kind of your go-to. You take these other factors into consideration, you follow them, right?
Right. And it helps you prepare for what might be happening, right? So if you know that on day one, on January 20th, that there's going to be 100 executive orders, we got to be in tune to what those are, right?
Yeah.
Once we learn what those are, we're going to know, yes, there's going to be an initial knee-jerk reaction to it, but what's the long-term, effect of that?
Right.
So those are things that we're going to have to watch. In terms of what I've seen here, in terms of the liquidity, that liquidity herding that we talk about, there have been a series of bids and asks that were placed to, either push price down into bid liquidity or push price up into ask liquidity. And you can see it happening time and time again. Probably a little easier to see it here on the weekly chart. At least what we have happening locally. And here's a couple. I'm going to push the contrast here so we can see them a little bit better. But notice, and let me turn off this tag tool so we can not overlap. Notice this block of ask liquidity, stair stepping down, right? Boom, boom, boom. And what happened? These had no intention of getting filled. They were pushing price down into their asks. And what was happening alongside that? Ask liquidity was also, bid liquidity was stair stepping down as well. Boom, boom, boom. And so price fell right into that, right into that trend. And then they put they move a block of bids up, and price reacts to that, and we see the ask liquidity stair stepping up. And we've seen this happen a couple of times here, a few times here over the past week or two. And so now, I think that what we saw yesterday, here it is again yesterday, right? This pressure from here to here pushes price down, and then they let it rise back up. We saw a lot of buy volume here on the CVD out of Wales, which was good, and an expectation that price would move up, but then there was a bit of a fake out, right? Somebody else stepped in and sold a lot, and so it's a bit difficult to know what the long term is out of the shorter term time frame. Obviously, this is good for scalping, right? When you see this happening, when you see a ladder of bids get placed here, it's a pretty good indication, and moving up here, right, from here to here. It's a pretty good indication that price is going to move up. So that's good for some scalps. Whether it pays off, right? Do we make it past this 100K mark in the short term? Long term, yes, I think we do regain eventually. My macro outlook is that, yes, we do reclaim the 100K level. We do reclaim, move back into all-time highs and price discovery once things, depending on what transpires here with the new administration. I think there's great potential for that. And of course, the downside is that if the new administration enacts a lot of policies that are that the market deems not good for the market, meaning not good for businesses, not good for consumers, and I don't know, tariffs come to mind. That's likely going to lead to different outcomes, more of a risk-off situation, in my opinion. I don't know what your thoughts are on that, but that's my 2 cents worth.
Mark, yourself?
The tariff situation is like, I'm curious to see how it develops. I mean, there's no question. I think that it tends to have an inflationary pressure on consumer goods and consumer spending habits, and so that means there's going to be less money sloshing around for retail type people to be speculating on cryptocurrencies or stocks for that matter. No, I'm not convinced yet that that's necessarily the demographic that is steering the prices. I think it'll be the rungs of society that aren't too fazed by the price of milk that are currently in control of the Bitcoin price. So I'm not sure yet exactly how it's going to play out, but it is a very reasonable assertion.
Well, remember that those people who aren't too concerned with the price of milk are concerned with the strength of their businesses.
Of course.
So,
yeah. I understand that I understand that these things all flow into each other. That's what I mean. It's a totally reasonable assertion.
Right. I mean,
let me put it this way.
Cash buyers on $2 million properties don't care about mortgage rates, but they care about the strength of their business.
Of course. Yeah. But at the same time, especially with the tariff discussion as it's happening right now, it's being compared to this is not the first time the United States has brought about this kind of policy, and it didn't go very well the first time, and so people are speculating it's not going to go very well this time. Again, totally reasonable assertion.
You're talking about the market reacting to it didn't go very well, or are you talking about in general?
Market. I mean, I think the first time it brought about a fairly significant recession. It's one of the things that they teach in Economics 101 as being an example of very bad fiscal policy. But finance is very different today than it was back then. The richest people in the world don't have any money. They have things like like Tesla stock or Bitcoin or the things that they borrow against and that kind of thing. Now, I'm not saying that that's that gets them out of the woods necessarily, but I'm just saying that the cash that's flowing through their business is a slightly more and maybe disturbingly so abstract concept than it was 100 years ago.
Right.
So I'm not sure that it's going to be as immediate. I agree that these things all feed into each other and no one escapes it. But I think that it might play out slightly differently. The world's just a different place than it used to be.
For sure. 100%. 100%. In terms of what we're seeing now in the short term, like I said, since we have another we have another economic report tomorrow, right? Today was PPI, came in, I think 0.4% last month, and we're down, cut that in half this month, and that was missed by 0.1%. Core PPI month over month was a big miss, right? And so the fact that these numbers are coming down is a good thing. Whether we see something similar tomorrow with the core inflation data remains to be seen, and the CPI data coming out tomorrow. So, the market could have the same kind of reaction, but I think we're going to hover in this range at least until this data comes out. Meaning, and Mark, watch, now that I say this, probably the market will do exactly the opposite. But I don't think that we're going to crack the 100K mark today, at least until that data comes out, and possibly even where we have this this block of asks around 98K, which has some confluence with where this 50-day moving average is around 97.5K. So right now, this is looking like a glass ceiling for the moment. I think this is certainly penetrable. Holding above the 21 day moving average would be good, but this candle has to close up above here. And if it doesn't, then I think there's a good chance that we do make it all the way down here, especially if tomorrow's data isn't good.
I was just going to ask that.
If tomorrow's data isn't good, I think there's a good chance that we could go here and potentially
and
lower.
Here, for anybody who can't see your chart, Keith, really fast.
What's that?
Here you're saying what, 86? Is that what we're looking at?
Yeah, around that 86 range. It's where the 100-day moving average is right now, and that would have some confluence with this prior consolidation range. Mind you, this was a brief consolidation range. We spent more time and had 10 successful retests of support here at this 91.5 range, and yesterday we punched a hole in that. And so once that hole gets punched, which technically in a low time frame, this is a lower low, right? That opens the door to more downside, in my opinion. Of course, this trend precognition signal indicates that may not happen today. It could invalidate, but I think we'll stay up here until we get through tomorrow's data, and then see how the market reacts to that. There's something structural potentially developing here as well that some technicians are talking about, and that is a potential head and shoulders building here. And a head and shoulders pattern would ultimately resolve bullish, but it means that we have, if this is the head and we have a shoulder here and a shoulder here, which is basically our last two spikes up to the 102K level, then this could resolve to the downside potentially. And let's get a measure on that. Potentially, would it stop here? That's technically, with a head and shoulders pattern, you would expect it to go further, maybe to this 76K level. And historically, we've seen some similar price action that could take it right back to the trend, which will scare the shit out of a lot of people and shake out a lot of money. But if we look back to prior markets where we did see a flush. Look, this isn't the same kind of pattern, but look what happened here as we were climbing out of this. It was a flush right back. This was in 2023. We saw a flush right back to the 2017 top.
And that would be that 76.
And well, for, if we extrapolate that now to, this current price action, then that would get us all the way down to the, to the 69, 70K level. And doing that violates a lot, right? That could, if it doesn't bounce from there, that could spell the end, right? But a V-shaped recovery from there, as we've seen in other instances, right? Here's one. Here's a head and shoulders. Here's the head. Here's a shoulder. Here's a shoulder. Bounce up, right?
What sort of time frame was that? The one that you're looking at right now. Can you zoom in on that one a little bit?
This was from March 2023 to September. So that
from the time the head and shoulders formed.
Excuse me, the head and shoulders played out in June. But there's different factors, and I think that probably the most important one, just to bring it back around, is what policies is the new administration going to enact that impact the market. Obviously, that his goal is to have the strongest stock market ever. Hell, he's been he's been claiming responsibility for the one that happened while he wasn't in office. So his goal, and this is what's going to work against, in my opinion, this is the internal wrestling match that he's going to have. He wants to have tariffs, but he also wants to have a really strong market. And so maybe there's a balance in there somewhere.
What happened with the cup and handle that we were watching? Still there? Still there.
Absolutely still there.
You still feel like...
I mean, in my opinion, it's valid. Even if it doesn't make it all the way to what my target is, I think this is a valid pattern. The target still remains up, above this 120K level. And I do still think that there's a high probability that we get there. I'm not sure that will serve as market top if it happens. And of course, some sweeping economic moves on day one of the administration could blow it up. So
yeah,
it's a wait and see.
Mark, are there any key levels or anything specific that you're looking at? I know that you're not as much, looking at the charts and doing this technical analysis, but you do look at some different indicators and things than Keith does, right? So are you seeing the same sort of things just with different data sets, or are you seeing something maybe a little bit different? What are you looking at and feeling at the moment?
Well, yeah, I mean, I'm not, I try, like, if there isn't an obvious reason for something, I might sort of ignore it and just put it down to the overall mood of the market. I do pay attention to.
What do you mean reason? Do you mean news? Do you mean the technical analysis, the indicators, or kind of
there's something causative, like with the carry trade, for example, that happened mid last year.
Right.
There are things that are literally causing a certain price action. And then there are things that are yeah, exactly, for sure. And then there are things that are well, maybe this is changing the way people feel, and I get to more visceral. And so I try to, obviously those things are important. I'm not saying you should ignore them, but I try not to put as much sort of causation. I try not to lean too much on that kind of speculation. Well, but as you know, I do like to read tea leaves when it comes to chart analysis and stuff. One of the things that I do pay attention to are momentum divergences, and leading up into Christmas, like there was a very strong bearish divergence forming on the Bitcoin chart, at least on the daily chart. So beginning from like the 11th of November and rallying up until the 16th of December, you can see that was making consistently higher highs, but both the RSI and the MACD were trending downwards. So in terms of the the price action we've seen since about the 18th of December, I would say was more or less predicted by that that divergence pattern forming.
You said the 18th you mentioned the 18th of December.
Yeah.
Can I blow your mind with a tea leaf?
Yeah, go ahead.
How about December 17th?
Yeah, just
every year
actually better
has been December 17th, December 17th, December 17th, December 17th, December 17th. This one was December 16th, December 17th, December 17th.
Yeah, and it like if you have a look at the the RSI and the MACD both were predicting a trend reversal at about that time. So I think that it's unsurprising is what I'm trying to say, is that
of course this is probably nothing, right?
You can find, it reminds me of one of the other, I said earlier on this call that I noticed a very unusual concentration of people discussing yield curve inversion, even though it's like old news. Right. There is something else that came up, and it's like extremely obscure. It comes from, I don't even know how long ago. I think it was like 150-year-old like market prediction method that was developed by someone named Samuel Benner. And it's basically, he took a whole bunch of data, which I'm not even sure how much data he had available to him 150 years ago. But he noticed these like sequences that would show, and so he basically just came up with a function that would tell you which years are likely to produce low prices, and so you should be buying stuff, and which years have high prices, and so when should you be selling stuff. And this is, again, like very, very obscure, and all of a sudden I see people tweeting about it. Like it went from being this really weird piece of trivia that I had to something that is suddenly common knowledge.
Right, suddenly trending on X.
Yeah, and I also saw there's a relatively respected, I think Dow trader. What's his name? Robert Prechter. He's a very famous like bearish trader. But he's like he's an Elliott wave theorist, and he was speaking about it, or I saw him on a YouTube channel speaking about it. It's just weird to see it show up like that. But yeah, it just reminds me of that, what you just showed us with the December 17 ticks, is that humans have this innate ability to recognize patterns in data. And this is what this guy Benno was doing 150 years ago. And his chart says that 2026 will be a year of good times, high prices, and the time to sell stocks and values of all kinds. And he also says that there will be a market panic in 2035, and that the year of bad times, so the bottom of the market, is going to be 2032. Now don't just take that with a grain of salt. Take that with, a truckload of salt. This is someone from 150 years in the past.
I saw.
Didn't even know about Bitcoin.
I saw a chart today with a model that also predicted a bottom in 2032, but that bottom was $1 million for Bitcoin.
Well, that would be phenomenally interesting, wouldn't it? But yeah,
right? Imagine that's where support is. That's where the support trend line is. And so, to trade this now, right? So as we say frequently, there's a distinct difference between being a trader and being an investor. And if you're investing in Bitcoin right now, in my opinion, this is not advice, but the way I'm viewing it and the way that I'm playing it at this stage is
as both an investor and a trader
to ignore right? I have my investment stack and I have my trade stack.
Mhm.
Okay. So, and I'm only trading with about 20% of my stack, and the rest is just sticking in Bitcoin.
Yeah.
And, and a little bit of ETH that's just makes my eyes water like an onion. But, but this volatility, we're going to have this volatility, and certainly I expect this volatility to continue through this month. And does it continue through the quarter when we start to see how things are developing? I won't put the political spin on it. I'll put the economic spin on it. However the economy resolves as relative to policy changes. We're going to see that volatility, but in the end, until the trend is broken, and this macro view might be a little, you may not have the stomach to ride it down this deep. I know that if we broke through this, I would lighten up my position and look for new buying opportunities. But let's say that we take it to really maybe the more current trend from say here to here, and I'm just ballparking it here, right? Then that's more correlated with this 200-day moving average. And this is a level that puts us right above that 2021 top, right?
Yeah.
So this is going to be the line in the sand for a lot of people. Keep in mind, we get a lot of overshoots. Wicks will shoot through this line, so you're looking for support. Like the August 5th issue that Mark brought up with the Japanese carry trade. Here it is, right here. Big wick, big opportunity on that trend line, but it resolved. And so this was an opportunity for traders, but investors who rode this out are no worse for the wear. Right? In
Right.
fact, they're doing just fine. So keep that in mind. If you're in it, if you're in it for the long game and you have conviction that the top is not in, just know that the bottom might not be in either.
Yeah.
And if you're prepared to ride out that drawdown, you're going to be fine. If you're not prepared to ride out that drawdown, pick your levels. Pick your levels.
I imagine
of validation.
If Ben Cohen were here, one of the things that he would probably like to remind everyone is that even during a bull market, the Bitcoin price action tends to come back and check its moving averages fairly regularly. The last cycle was a little bit weird in that regard, in that it tended to, it rallied very, very quickly, and so it didn't check the averages as much as previous cycles had. But if you check, for example, the 2015 to 2018 bull market, you'll see it skips along the the 20 or the 21 weekly moving averages, both the SMA and the EMA. And if you have a look at where we are today, we're still like a decent ways above these moving averages, right? I'm measuring about somewhere in the vicinity of about 14% above at least the closest moving average. And we shouldn't be surprised to see the price at least come back to check these levels before rallying higher. That is a very characteristic Bitcoin behavior. And so if you're going to choose levels from here, something like the 85 to 86K level, even the 80K level, and if you are even more conservative, something like the 71K level is not looking too bad either from a technical perspective.
Interestingly, that trend line that I just drew, that was parallel to the 200-week moving average.
Yeah.
No, excuse me, 200-day is perfectly correlated
Right
with
there.
Right on the 70. Yeah. So like if I was choosing a price target right now and I was, interested in picking up more Bitcoin because I'm convinced that the price is going to continue to trend higher, which Keith and I both think that the top is not in yet, and that we still have some time ahead of us before the top is officially in. I think that these levels are realistic. At least the 85K level is, I think, almost certain. And yeah, the slightly slower moving averages on the weekly, the 50 odd moving averages are not terrible either, and they're sitting at about, at least on the chart that I'm looking at about 70.5K, maybe just a hair above that.
Yeah,
not a terrible place to put a bid.
I'm happy to be a buyer at these levels. And Mark, don't front run me, bro. I'm happy to be a buyer at these levels because I think that prices is obviously going to resolve itself, and I don't know that I'm going to get a chance to buy below this line ever again. And so, do I have a stink bid down here just in case? You're damn right I do. But I don't know that that's a high probability move here without a major black swan event bringing us down there.
How far down is that?
That is around 56-ish. Remember we had a double bottom down here around 54.
So 45% down or something like that.
That's like I think that's like a 50% move from the all-time high, which is not, we've discussed this in the past.
Not unheard of.
That's a 40% move from the all-time high. And that's certainly not unheard of. There's plenty of examples of that happening in prior bull markets, right? So those dips are opportunities. I view them as opportunities. So it'd be 33% to get to that higher trend line. Around that 72 level, would we have 76? We have this consolidation. That's a 30% move. To make it all the way down to this, and this is black swan territory, in my opinion, if we were to go this low, that would be a 46% move from here. So not out of the realm of possibilities. And we're still, as long as we bounce, that'd be a hell of an opportunity to buy there again.
Yeah. Well, it's nice that you're able to just set your bids on, centralized and decentralized exchanges. You mentioned Litecoin and Solana earlier, which, by the way, speaking of Twitter and X, did you guys see I think the intern was working the Litecoin Twitter account? Because
they had a Twitter account.
They said something about Solana. So it was funny that you had mentioned those. I was kind of like internally giggling when you had said that. But
I think I saw something about ETH. It said like Litecoin, we now identify as a computer. Like a month ago, they were saying they identify as a meme.
This one was a little more aggressive.
Right. And then
yeah. But okay, so remind me what you said about your Litecoin and Solana, and maybe we can just touch on the alts for a minute. I know, Mark, you tend to kind of play a little bit more with the alts than you might in the sort of if time with Bitcoin. Is there anything new and specific you guys are looking at, or kind of the same? Keith, I know you're not a big alt guy, right? You kind of stick to the same ones, the XRP, Litecoin, Solana, right? Are these kind of where you're still at in the moment?
In the moment, I'm not sticking with any of them. I'm looking for those opportunities. I have bids for, for those lower levels. In terms of altcoins, Mark, I'll ask you when alt season. Right now, Bitcoin dominance is back up to 58.5%. Litecoin, I haven't even looked at these charts today, but let's see if there's a tail of the tape here.
Interesting about Litecoin. So if you're on the Litecoin or you're on the Solana chart?
Here, I got a Litecoin chart up here someplace. Here we go. Litecoin is that's a monthly chart.
Go to the weekly.
Look at where that wick. Look at this wick between the 100-day and the 21-day on yesterday's candle. The weekly has us.
It's just above the 200, I think.
Just below it, actually.
Just below it. Okay. Well, it rallied above it. which is pretty significant, and it stayed there for a relatively long time. There are a few weeks that it was actually above its 200 moving average. It's just recently fallen back below it, but it's still above a macro trend line that I kind of have apparently drawn on this chart that's been there for a year or something. And I might move that line around a little bit now, but yeah, it's looking like it's Litecoin. It is not an unattractive chart at present. It certainly looks like it's been coiling up for a move for a long time. Remember, XRP had a similar pattern before it rallied, and again, this may have been caused by political alignment or whatever. Doesn't matter. The point is that XRP had a similar looking chart, and now it is 6x higher than the last time I said that. And Litecoin, it really doesn't look too bad. And Litecoin is a fairly decent project. People actually use this cryptocurrency for things. Compared to a lot of the other things we say in cryptocurrency,
it's why I like it, and I have mixed feelings over selling what I had. I was in a nice profit. I think I had an entry around, like around 89, and I sold, when we had when we started to retrace this move. And then yesterday I tried to buy more. You can see my setup. And I got flushed out on the wick, and price still hasn't made it to what my entry was. So, I'm going to wait and see how this resolves. I will buy it again because I like the coin. I like the asset. But I'm not chasing it.
Yeah, I think that's.
It's interesting. We always say, like, at least you got your profits, right? And as much as I think we try to, tell ourselves to hold on to that, it's still, like you said, you still have mixed emotions on how you feel about it, right? But I mean, having those mixed emotions have still got to feel a little bit better than, potentially riding it all the way down and giving back all of your, unrealized profit and everything else. But it's still a mind game at the end of the day, really.
Yeah, absolutely. And I'm, I think I talked last week about maybe this was on one of my streams, just about, being a more disciplined trader, in that this year I was going to spend more time and effort on being more disciplined and not constantly going in and adjusting my trades, and just, setting them up and letting them play out or not. Like, obviously if you see something major happening, then you might go ahead and change your profit targets. But, with Bitcoin, I don't do it so much, but with the alts, I don't have a lot of confidence in the alts. So I don't regret taking profits.
Right.
Nobody ever got broke taking profits. So, and then I look at my overall of how I performed last year, and I had a good year, had had a solid performance through the year, and my lifetime performance is solid. But I think in terms of, what would I have done with my trading versus a buy and hold? And the biggest difference is risk management. I wasn't fully invested throughout much of the year, waiting to deploy more funds as those opportunities presented themselves. So, if Bitcoin went 130% for the year, and I fell shy of 100%, it's not because I'm a bad trader. It's because I'm a more conservative trader, and I didn't risk all of my capital. I certainly didn't win every trade, but I chalk that up to risk management and to your risk profile.
Trying to win every trade too. I mean, that's how you'll quickly, right? I mean, I would think trying to win every trade is how you'll quickly turn into losing more than
right, because then you turn into a revenge trader.
Yeah.
And I can speak from experience that doesn't typically end well.
Yeah. We only have a couple of minutes. Mark, I wanted to ask you a question. Last week we were talking about data and stuff. I forgot to bring it up last week, but it was last Tuesday, I believe, that the block came out with some data that the DEX to SEX spot trade volume surpasses 20% for the first time ever. This was taken as a big deal. What do you make of this, if anything at all?
Who are you asking?
You.
I think he'd like you to repeat the question.
Okay.
That's like the safe answer.
No,
I'm sorry. Can you repeat that?
Yeah. But okay. The fact that DEX spot volume is 20% of the centralized exchange spot volume, I'd say is an interesting anecdote. But it's important to remember that the boundary between these two things is now a little bit more vague than maybe it was back in 2019, 2020. Yeah. And, the reason I say that is that, Binance launched its own blockchain, the Binance Smart Chain, in, I think, 2021. Coinbase has its own, blockchain now, which is the base chain. And there are more coming. I've heard at least a dozen different exchanges over the last year tell me that
Kraken has theirs coming.
Or
already live, yeah.
Kraken has theirs coming, right? And so one of the things, I had a conversation with someone very recently where I pointed out that one of the reasons why on some of these Ethereum layer 2s, where the spot volume is extremely high or where the liquidity is extremely tight around a certain price range, is that because those blockchains are run with centralized sequences, the chain itself, the person who is orchestrating the chain, can order the transactions how they like. And this means that they can move the prices on the on-chain liquidity so as to, basically manage the state of the chain so that they aren't committing to losing trades, which is something that you can only do if you're the person with the privilege of being able to reorder the transactions the way that you like. So it's it's not a fair comparison anymore. If it was the spot volume on Ethereum mainnet was 20% of all centralized exchanges, that would be very, very impressive, right? But for pretty much any other blockchain, and not any other blockchain, but certainly all of the Ethereum layer 2s, and that is where the overwhelming majority of the trading volume is concentrated. Right. It's not as spectacular a statistic as you might think, because really the same people that are processing the trading volume on centralized exchanges are the very same that are now processing the trading volume on blockchains as well. There is no longer a distinction between those two things.
Wait, say that again. There's no longer a distinction between what?
Between the market making on a centralized exchange and the market making on a decentralized exchange. They're run by the same businesses.
Right. Which, being run by the same business, by definition, makes it not so decentralized, doesn't it?
Well, pretty much, yeah. A lot of these layer 2s aren't decentralized. They don't even advertise themselves as being decentralized. And This is the point that I'm making. They have centralized sequences. They have, it is a blockchain, yes, but it is a blockchain that is, brought to you by business X.
Right.
So it's not Ethereum. It's not the same sort of cryptography ethos, CryptoPunk sort of atmosphere. And I think that would have been a much more exciting accolade to celebrate. In this case, it's more like those same businesses that are running the centralized exchanges have put on their Bitcoin, their cryptocurrency and, decentralization blockchain costumes, and are now bringing you exactly the same businesses that they offer on Web 2 and are calling it Web 3, which is okay. I'm not critical of that. I'm just pointing out that I don't think that the accolade is all that impressive.
As an impressive piece of data as
who was the Batman character? Was it Two-Face? That
Two-Face.
yeah.
Right?
Harvey Dent.
Right. So one side he's decentralized, and the other side he's pulling the purse strings.
Yeah.
That's interesting. I just saw something come across my screen about from Gary Gensler, who's stepping down this week, and that's one of the things that the market is really anticipating is what is the regulatory landscape going to be like. And something, we've all, at least any of us who have been in this space for any length of time, nobody wants over-regulation, which we've had. Nobody wants regulation by enforcement, which we've had. We want clear
Clarity.
definition, right? We want we want to know the clear rules of engagement. Oh, by the way, what would be a great executive order would be, no capital gains tax on crypto. That'd be great. That's something that would make the market boom.
That was something that he had spoken about, by the way.
I've seen that in other nations. I haven't seen that happen here yet.
The specific of it, I think, if I'm not mistaken, and please don't quote me on it, but I think it was no capital gains tax on cryptocurrency from projects that were founded and operating in the United States.
I saw one that was
and again, don't quote me, but
for holding 3 years or longer.
Okay. I'll take either one.
That's interesting. That would be amazing. But the point I was getting at is in terms of DeFi, this is still very much a wild frontier, right? We're still pioneering in DeFi. So I'm interested to see if we get any more definition, more regulatory framework around DeFi, so that I think that would it's obviously going to help builders, but it's also going to bring more adoption, right? You guys know my skepticism, and I'll give you a prime example. I'm in the process. The timing isn't great for me, but I'm in a situation where I gotta find a house, right? And so we're going to move here soon. I don't want to sell my crypto to use as a down payment on a house. And I considered a lending protocol. But it's still, for me, for my risk profile, that's still a high risk route to go for something like a house. Would I consider it to, maybe, for a smaller purchase? Sure. But
hey, some in DeFi have gotten their houses though, Mark. There's one specific that I'm thinking of that I won't name names, but I'm sure you know who I'm speaking about, right? I mean, it worked out for them, Keith.
For them it did, but it was at the expense of a very large number of
We'll leave it, but yeah, no, it's not unheard of, but I understand why you would be
it's certainly not unheard of, and I'm sure that a lot of people use those platforms successfully. There wouldn't be so many of them if they didn't. But for something like a house, I'm a little
skeptical.
I'd be a little concerned at this stage, right? The regulatory landscape could change next week. I don't think it's going to happen that fast, but technically things could change and come into form very, very quickly on that front. And I'll be watching for that, but have to see.
For those who are a little removed, because it's very common to hear people, influencers and news channels on YouTube or whatever, talk about the regulatory landscape in cryptocurrency. But I don't know many people that actually go into like the SEC website and actually read, some of the things that are happening. I wanted to recommend this, in terms of what it means to say that the Trump administration might be more crypto friendly, or at least crypto regulation friendly. I really, really recommend, this piece by Commissioner Hester Pierce and Marco Ieto.
Share that link in the comments.
Sure.
Hester Pierce is crypto friendly. I like her.
Both of these people are phenomenal. And what they like in this piece, they've really captured, I think, the horrible reality of what it means to run a cryptocurrency project and interface with the Securities and Exchange Commission. And they've written this kind of like, it's hilarious. You know, this was referring to Shapeshift, which is, you know, a crypto project, sort of an exchange. And they wrote this kind of fictitious, you know, dialogue between Shapeshift and the SEC, where Shapeshift says, hello, I'd like to register as a dealer. And the SEC is like, why? Because I think some of the assets that I plan to deal might be deemed at some point by the SEC to be securities. Which ones? I'm not sure, because I can't really understand what criteria you use to decide whether a token is offering, where a token offering is a securities transaction, and if it is, whether the token that was the subject of the investment contract remains a security in secondary market transactions. Well, if you don't know whether you're dealing in securities, you can't register. And by the way, if some of the assets you're dealing with are not securities, you also can't register. So can you help us think through which assets are securities? No. We suggest that you read the 2017 DAO report, and it will all be clear to you. You can also look at our enforcement actions if you want. I read it, and I've read about your enforcement actions. I still have questions. Hire a lawyer. I did. The lawyer has even more questions. Sorry, we cannot help any more than we already have. We don't give legal advice. This is a packet of how it feels, you know, to run a cryptocurrency project and deal with, you know, American regulators. It is the worst combination of, you know, of bureaucracy and sort of this Orwellian catastrophe. And so when people say that, you know, things are going to get friendlier, this is the kind of shit that they're talking about. This is why Gary Gensler is so universally hated, even by his colleagues, right? As being seen as an incompetent regulator, because this isn't law running well. This is something that's being made a circus of. And so, yeah, just I wanted to provide it as context, right? It's not necessarily that, you know, maybe Trump won't do anything about, you know, capital gains taxes. Maybe he won't do anything to incentivize new cryptocurrency projects, whatever. That's all sort of on the periphery. The throbbing, you know, infection at the heart of the SEC is this kind of stuff.
Well, we'll have more to talk about, maybe, possibly. I mean, first day in office, right, is coming up. So like we had said, quite a few things that are going to be happening, you know, if not the first day, within the first week, 2 weeks that have been spoken about. But, you know, whether or not crypto has anything to do with that, I'm pretty sure that that was mentioned as well as kind of one of the first things that were going to be happening. So,
well, next week's show is the day after inauguration.
The day after, I know. So we'll have some interesting things to talk about and some interesting, I'm sure, data points too, right? We'll see how the market reacts, and we'll kind of get back in there and see what things are looking like. Thank you guys. I know we went a little bit over today, but thank you both for sticking around. Thank you to our viewers as well. We'll see how this plays out.
That was a good discussion.
Thank you guys. It was a great discussion today. And to all of our viewers also, please give the guys the follow on X. You'll see on the announcements there. It's MB Richardson 87 and KA_productions, correct?
No, just KA Productions.
KA Productions. It's the me algos that has the material algos.
MI_algos for material indicators.
Thank you. Thank you. Okay. We will see you guys next Tuesday. Thanks so much.
Sounds good. Thank you guys. Have a great week.
Thank you, everyone. We'll see ya.
All right, bye.